Brought down by bad mortgage investments, Lehman, which has 25,000 employees, will be liquidated.
The federal government loans American International Group, AIG, $85 billion.
This is a different kind of market, and the Fed is asleep.
The federal government is stepping in to stabilize Fannie Mae and Freddie Mac, the two mortgage giants that have been threatened by the housing crisis.
The Bank of England has pumped £75 billion more into Britain's ailing economy with a new round of quantitative easing.
You print a couple $1 trillion, and all of a sudden, people start to worry. So out of this worry, we have something called the Bitcoin.
Welcome to another episode of On the Brink. I'm Matt Walsh.
And I'm Nick Carter.
And Nick, the price went up this week.
Number go up. It sure feels good when it goes up in fact, it's gone up for 7 weeks straight. It's pretty good.
When was the last time that happened?
The last time that happened was in May 2017. I think something good happened after that, but I don't remember what exactly.
Oh man, I just feel better when the price goes up. So at the time we're recording this, the price of Bitcoin on Coinmetrics is $87.91. And you know what the rising price of Bitcoin means? Everyone should be thinking about how secure your Bitcoins are. So this week's episode is timely. It's brought to you by Casa, which is one of our portfolio companies. How confident are you about the security of your Bitcoin? Every quarter, we've been hearing stories about exchange hacks, a new exit scam, a friend who lost their PIN, or someone who passed away and had their family come up empty-handed. The best way to keep your Bitcoin safe is to hold it for yourself, and Casa is the easiest and the safest way to do that. They have one of the most well-respected teams in the industry. They have amazing design, 24/7 support, and they have some great introductory packages available right now that were previously only available to ultra high net worth individuals. So if you're ready to do a security upgrade, you can get started with a membership as low as $10 a month and use the coupon code CASTLE to get 10% off. Head over to keys.casa to get peace of mind that your Bitcoin is safe. Pretty timely with the security solutions right now.
Yeah, a lot of people are going to be wondering about that right now. People who bought the dip, hope you did. I've been auto DCAing on River. It kind of changes the psychology. You don't worry that much about the dips once you start auto DCAing.
I know I've been using River for auto DCA and then also BlockFi, but just awesome. Awesome to see. Puts me in a better mood, but it's not about the price. It's about the underlying technology, right?
That's the theory, yeah. The tech, Bitcoin, nothing much has happened in the last year. I also heard that BIP Taproot has been potentially delayed another 6 months. I think it's actually unlikely that we get Taproot or Schnorr in 2020.
Interesting. Why is that?
Well, there's just more review that needs to be done. It's fairly complex. It's a really material alteration to Bitcoin, so it's going through the committee right now.
We'll have an ossification of that base layer at some point, but I was kind of joking about the underlying technology, but almost more referring to some of the infrastructure getting built with the companies as opposed to the protocol itself. But we actually had a couple really good episodes talking about some infrastructure this week. So we had Peter Johnson, who's the head of fintech and crypto investing at Jump Capital. So he came on the show early in the week, talked about fintech infrastructure, talked about crypto infrastructure. Jump's doing a ton of stuff in this space. They're a proprietary trading shop, obviously, have done really well with just traditional asset classes and moved into crypto a few years ago. And Peter's super thoughtful. So that was a lot of fun. And then had Moise Kahari on, actually. So Moise is previously a senior technologist at State Street and the London Stock Exchange. He left to start Monetu, which is actually one of our portfolio companies, and they're in the data privacy space. They're using blockchains to just timestamp audit logs. So we talked about Monetu, talked about privacy in general, why people are starting to care more, and also talked about the state of some of these crypto build-outs at large enterprises. And not surprisingly, it tends to be a little bit harder to build some of these things when you're a bank or a broker-dealer. So that's why we're seeing a big kind of opportunity for startups to just get ahead of the curve. And you've seen this with the custody solutions and the exchanges, certainly.
Yeah, I don't know if that's always the case that large enterprises move so slowly, but certainly in crypto, they've been really devastatingly slow. which is much to the advantage of the startup industry.
Yeah, there's that saying that no one gets fired for hiring IBM. And I guess no one gets fired for hiring IBM to do a pointless blockchain proof of concept, but you would get fired, if you did something crazy in the crypto space. So it's a pretty easy still, if you're at one of these big enterprises, to say, we don't really care about Bitcoin, but we care about blockchain and the underlying technology. But pretty soon, and I think more and more actually, just given the macro climate, it's inexcusable not to have a point of view on this technology that's at least informed by the fact that, hey, Bitcoin really has a purpose here. And by the way, stable coins too are really gaining some pretty critical mainstream adoption for public blockchains. And so if you're just ignoring that at a big enterprise right now, it's probably not as easy as if it was 2016.
I've definitely noticed a shift as stablecoins have come to the fore here. People have realized that, fiat settlement on chain is a real use case, and that's not subject to the same critiques as, cryptocurrencies, which are volatile. That critique obviously doesn't hold. So then, you have to come up with more creative reasons for why you don't like it. There's something materially changing here. I mean, look at the amount of effort Visa is placing on stablecoins, or at least the amount of interest they have in it. Kai Sheffield over there is super smart about it. I think something seems to be changing here. Maybe stablecoins kind of got critical mass and people realized they weren't just used for inter-exchange settlement.
Yeah, I think it's so funny that Jeremy Allaire is sort of at the forefront of both of these things. Back in 2013, it was like, hey, there's a real entrepreneur here, a guy who's, started some very successful companies getting into Bitcoin, and obviously, grew Circle. And then now he's really at the forefront of stablecoins, which is, again, one of these just huge trends that big enterprises are going to have to kind of come to grips with. And we're going to see a massive dollarization here in countries that otherwise wouldn't really have easy access for their citizens to get exposure to US dollars. And so it's going to be interesting. USDC is really growing rapidly. Tether continues to add just tremendous, I don't know if you'd call that AUM, but tremendous assets.
Yeah, they'll be over 10 billion in a couple of days here is my prediction. They're at about 9.5 right now. And I know a lot of you reached out and gave us really good feedback on the crypto dollarization series. So thank you for that. We're going to have at least 2 more episodes in that series, probably 3. So stay tuned. Those will be pretty soon.
Yeah, that'll be fun. So a lot to talk about there. A couple deals this week. So Skew, which is a crypto asset data and trading platform. I really like these guys' charts. So they have a lot of good derivative data. They raised $5 million in a round led by Octopus Ventures with participation from First Minute Capital and Seedcamp. Do you see that one?
Yeah, of course. Yeah, Skew is a platform that I consult probably daily for info on derivatives, options, liquidity within the industry, liquidations. Real credit to Emmanuel and the team. They built something really cool. They're alums of blockchain.info. If you trace it back, there's so many startups in crypto that are built by alums of blockchain, which is kind of funny. You wouldn't really think of blockchain as like a mafia per se, but there's a ton of really vibrant startups that are built by blockchain, ex-blockchain employees.
Yeah, I think Ash Egan had written that blog post about the various mafias. It would be interesting to see a revision of that blog post because there's the blockchain.com mafia, the Coinbase mafia. I would venture to say the Fidelity mafia maybe on that list. So there's a bunch of good...
We need some more people to leave Fidelity and start startups for it to be a real mafia.
It's like the Bill Parcells and the Bill Belichick coaching trees.
Yeah, what are the other big ones? I mean, Consensus is obviously a big spoke here.
Kraken had a little bit of a mafia there.
Yeah, although I think canonically for a mafia to exist, you need there to be I think the theory is that there's a big exit, but not like an overly large exit, so that a lot of the early employees, can self-fund or bootstrap businesses after that, but not be so rich that they don't want to work. So we haven't had one of those in crypto. So that's the theory about PayPal, I think.
Well, we got small mafias for now, but we're on our way to bigger and better mafias, I would say.
Exactly. The other deal that was announced this week is Taurus Group, which is a platform for the issuance and custody of digital assets. They raised an $11 million Series A, led by Arab Bank Switzerland, with participation from the Tezos Foundation.
So good to see some deals happening in this space. And speaking of deals and companies that lead a lot of deals, Andreessen Horowitz announced that they raised $515 million for their second crypto fund. So this comes on the heels of a $350 million Fund 1, which they raised in 2018. So congrats to these guys. What a great thing for the industry. I mean, you can like this investment thesis, you can not like this investment thesis. Doesn't really matter in my mind. I think this is really good for the overall industry to have sources of capital to be able to, write big checks into this industry and to support some of the great companies that are being built. There's historically been a little bit of a gap in financing here, right? You have a lot of capital potentially at the seed stage, or I wouldn't say a lot, but you have capital providers at the seed stage, but there haven't been a ton of very large funds, and it's good to see Andreessen Horowitz be able to pull this raise off. And it's great to have them out there just as a mouthpiece, getting more institutional investors thinking about this space.
Yeah, this is a real vote of confidence on the part of their LPs for the crypto industry. And this fund is being positioned explicitly as a venture fund. It's clear to us, of course, that the venture approach is the correct way to play this strategy. And it seems that A16Z agrees. So definitely a positive development for the industry.
So congrats to those folks. Really good job with that raise. In other news, FTX, which is one of the larger and emerging cryptocurrency derivatives exchanges, they operate outside the United States. I'm actually not sure where they're domiciled, but there's a report this week that they're planning on launching a US-based spot market exchange in May, which I absolutely love, by the way, just the fact that they're coming out and say we're launching this in May, which is like a day away. So some of these companies just move so fast.
Yeah, I think when you're not, strictly regulated per se, you have many fewer encumbrances. But yeah, FTX is one of the most dynamic exchanges in crypto. I remember when I first found out about them and saw their levered, financial products that were intended to, multiply the performance of like various, baskets of cryptocurrencies. I thought immediately of the Direxion inverse or 3x levered ETFs, which retail loves. And, I had a feeling that they would do pretty well. And they've just continued to innovate. They created prediction markets for the election. So just all kinds of interesting and exotic products.
Yeah, this one will be interesting to watch because, they're going to have to go through the money transmitter license process, which it looks like they've already started. So we'll see. They're going to have to kind of fall under these U.S. regulations if they want to do it right. So, we've seen other cases of non-U.S. exchanges come in and be successful. So we'll see how it goes with FTX. But exciting move. I think more platforms, more exchanges is a good thing. So moving on, I thought this was kind of an interesting story. So we've been monitoring this SEC versus Kik case for a long time. Kik, of course, is the messaging app that did the big ICO, $100 million, I think, ICO. It's being prosecuted now by the SEC for being an unregistered securities offering. I would say the facts and circumstances don't look very favorable if you're Kik, but what do I know? This week, the SEC opposed an amicus brief that was filed by a trade group called the Blockchain Alliance. And it's pretty rare to have the SEC just oppose a brief even being put on the record here. But basically what the SEC said was that this is a group talking about the Blockchain Alliance that was not impartial, and that they had a number of members of the group that had a financial interest in either the equity or the tokens, or even like the issuance and trading of these tokens for Kik. And so they called out the fact that Polychain and USV and eToro, Cumberland, CoinList, a few others, I think, are all members of the Blockchain Alliance. I thought it was interesting that this was opposed, first of all, but at the end of the day, it looks like the court actually accepted it, but pretty aggressive posture by the SEC to just not even want this on record. I thought that was at least interesting to me.
Yeah, I can't say that I'm shocked that a group called the Blockchain Alliance was considered to not be neutral on the topic of this lawsuit. It seems like the SEC basically has the upper hand in both this case and the Telegram one, which also has new developments this week. These are kind of two of the bellwether cases, in our estimate at least. Both of them involved a SAFT. In the Telegram case, the SEC really won a significant battle. I mean, the case isn't over yet, but they did get the judge to issue an injunction against Telegram issuing grams out to their investors, so to effectively to stop them redistributing out those tokens to the general public, kind of alleging that the early investors weren't just investors, they're actually, distributors or underwriters effectively. So now Telegram is kind of negotiating with their investors because this clause has been triggered that entitles the investors to a return of the funds, or a partial return, because actually Telegram spent some of the funds, as it were. And so now they're entreating their crowd sale investors to not actually ask their money back and give them some more time.
Yeah, I thought that was pretty interesting. So they came out this week, Telegram, and they announced that they're going to postpone the launch of their network until at least 2021, give the investors the option to take their money back at a discount or roll it into equity in Telegram, which is interesting because Telegram, I don't think, has raised an equity round, but it's obviously a very, it's a big platform. I mean, a lot of people use Telegram. I don't know that it monetizes, but I guess that was why they were doing an ICO, to monetize through seigniorage at the end of the day.
Yeah, I mean, the whispers are that it was the ICO funds that have been used to pay for the Telegram servers, which are apparently pretty expensive, which I understand because, I put a lot of data on Telegram. It's just a great product. Yeah, they haven't raised an outside equity round. No one aside from the Durovs owns equity in Telegram, as far as I know. I probably wouldn't be averse to owning equity in Telegram if I was an investor, though. I feel like they do have ways to monetize this if worse comes to worst.
How funny is it, though, that's Telegram is very similar to Kik, right? Like Kik was a pretty popular messaging app back in the day. That was one of the only ways that you could message from an iPhone to a BlackBerry, I think. And so that was the real use case. It was basically they took BBM and then they took it cross-platform, and they just could never monetize it. They raised a ton of money, and both of these companies end up doing ICOs.
Yeah, that might have been, like maybe the ICO allowed them to arrest that kind of market signal from coming through, that maybe fundamentally it's just very hard to monetize a messaging app. I mean, how does WhatsApp monetize, for instance? I think it's just, part of that Facebook ecosystem kind of thing.
Yeah, Facebook had that huge deal in the Indian telco company in the past week. And I think a big question there was whether or not this was going to be part of a grander vision for WhatsApp monetization strategy. But I don't know if you remember that WhatsApp used to charge everyone $1 per download. And so at the time it was acquired by Facebook, it was actually doing decent just based on people paying $1 per year to have it. I'm not sure that there's a monetization within, not to say there won't be. I think monetizing messaging is a huge opportunity. We're going to see some really interesting companies come across to do it. But to date, there hasn't been a real big company built there.
So there's actually a lot of regulatory news this week. So another thing the SEC did was charge the founders of something called Drophill with violating securities laws in a 2018 ICO. So seems like the SEC is still undertaking this cleanup act.
And it's crazy. Every time they come out with one of these like rinky-dink ICO projects that get slapped, I mean, I've never heard of this thing. I'm sure there's hundreds of others that I've never heard of. So they're fighting the front with the two big, huge kind of well-financed ICOs with Kik and Telegram, but they're simultaneously going after these little rinky-dink ones that basically just scammed people quietly.
Yeah, it's funny. I haven't heard of half of these ones, and I thought I had a handle on these. The last regulatory news item is that Brian Quintenz, who is a CFTC commissioner, has announced he's not going to be seeking renomination for his position, and his term ends next month. So Brian is out at the CFTC.
Well, that's too bad. I guess, that's how these things ought to work, though. You do your statutory term and you go on to the next thing. I'm sure he's going to have no shortage of job offers in the blockchain space. He really gets it. He's one of these people, one of these regulators that has a really good reputation of being someone that engages with the startup community. I've heard him on some podcasts. I think he was on Peter McCormack's podcast. So, it's a shame that he has to leave, I guess.
I remember him speaking at the Coin Center annual dinner with Hester Pierce, and they told a story about it was like a Scorpion and the Frog kind of story. It was like a allegorical tale. It was pretty interesting.
Yeah, well, I guess the same could probably not be said about SEC Commissioner Jay Clayton. I think he has another year left on his term. Hope the job market's doing really well for Jay Clayton. I hope that there are a lot of firms that are poking around and want him to join as a partner at their prestigious law firms, because if we're being honest, it wouldn't be the worst thing in the world to have some new blood in at the SEC taking a fresh perspective on a lot of things.
Yeah, it seems like nothing's going to change on the ETF front until Jay leaves, which, we looked it up. It's about a year from June, assuming that he doesn't extend his term by 18 months, which apparently is a thing they can do. And, you just look at the chaos in the oil markets and the USO instrument, which is incredibly inefficient and just ripped off retail investors. And then you look at GBDC, which is pretty inefficient, and you wonder, would a Bitcoin ETF really be so bad? And we kind of know what a Bitcoin ETF would look like. There's that the Bitcoin note product that trades on the Swedish NASDAQ, which is listed by CoinShares or administered by CoinShares. That thing trades very, very closely to the underlying. So you really do wonder about what the SEC's issue is here when they allow these 4x levered ETFs and these really inefficient commodities ETFs. Why they still have this prohibition on a Bitcoin ETF.
I agree. So if you work at a large law firm, you're partner there, you started it, and you're looking for a new partner, Jay Clayton would be great. He's got about a year left. Probably a good time to start putting out some feelers, seeing if he wants to hear about some job offers. It's always good to have an SEC commissioner with that experience at your law firm. Would be a really splashy hire. And if we can do anything to help, just let us know.
So, we'll put in a good word. So in another SEC-related piece of news, we have a Chinese ASIC manufacturer, Ebang Holdings, which has filed for a $100 million US IPO. Now, the question is, what are the odds that it turns out there's some sort of accounting fraud going on here?
Yeah, I mean, this is, the ground is littered with similar frauds. I would just say buyer beware on this one.
Yeah, very much so. What was the previous Canaan? The Canaan IPO has come under a lot of scrutiny. That one is looking extremely suspect. We have the Luckin Coffee IPO. Apparently, there's an enormous accounting scandal there. Very much buyer beware of these, offshore IPOs.
I'm reading the Bernie Madoff book right now, the book about his scandal, and it's pretty brazen. I mean, you got to hand it to the people that pull off these huge scandals, because they just have no moral compass and they just are so brazen. Like Madoff was just falsifying DTCC statements, which is just so crazy.
You know what the one that I found interesting was the 1MDB scandal.
Oh, that's the all-time best. Yeah.
He didn't even have the pretext of running a business or making investments. He just siphoned the money and spent it on models and bottles. There wasn't even the slightest attempt to actually run a business or anything. Like Bernie, it looked like he was running an investment firm. Some of the activity there was legitimate, but for 1MDB, it was literally just, let's liquidate these funds in Vegas.
I cannot wait until that movie comes out. If it's going to be a movie, hopefully it will be. But what an awesome book. It was so it was the $1 billion whale was the name of the book, and Joe Low.
Joe Low. So Joe Low financed The Wolf of Wall Street, which is absurd, which is a great film. And then as it turns out, there's like some like even greater shenanigans involved in the financing of the film. It's like a film about embezzling money or financial fraud. Turns out it's being backed by an enormous fraudster.
Can't make it up.
I wonder who they're going to get to play like Leo DiCaprio in the movie about the financing of The Wolf of Wall Street.
Yeah, I don't know. Maybe Matt Damon. So you've been really busy. You had 2 articles this week. So your latest for CoinDesk, how blockchains become great big garbage patches for data. I thought that was really interesting, something we talk about a lot just around some of these blockchains that really don't have robust fee markets that just allow for a lot of data to be written down to the chain. Results in a lot of blockchain bloat. So you have just private companies using the block space for something that benefits them, but is really not beneficial to the overall network health. So we've seen this time and time again on many different blockchains. So I thought that was a good piece.
Yeah, thank you. I'm glad you like my writing. It'd be weird if you didn't. So you guys know the concept of Chesterton's fence, right? It's like if you come across a fence somewhere and it doesn't seem to be guarding anything important, your first instinct might be like to tear it down. But, maybe there's just like a bull in the corner of the field or something, and it was actually a good idea to have that fence up in the first place. So you can kind of make the same argument with like features of Bitcoin. So Bitcoin has fees for a really good reason. Basically to stop Bitcoin being hit with spam or DOS attacks, and to stop it being cluttered with completely uneconomical garbage data. In fact, there's 2 things that protect Bitcoin, is the fees and the block size limit. So of course you have people that say, well, we don't need these features at all. We can just throw them away. It's unfair that there are fees. So they effectively subsidize block space. So they push the fees down to 0 and they remove block size caps. And unsurprisingly, you get a very predictable result, which is the chain gets absolutely bloated with complete junk, non-transactional data. And long-term, this is going to resolve in one of 2 ways. So either the node operators are going to get sick of having terabytes of junk data, and they're just going to prune it. They'll just eliminate it, which will mean that, fundamentally your immutability assurances are really weak. Or you'll just end up with 1 or 2 industrial-sized nodes, and it's not going to be a peer-to-peer network. So that's what is in store if you eliminate these like practical constraints.
There are a lot of examples to point to for this. Would you say EOS is up there at the top of the list?
Yeah, so EOS tried to price various resources. So they kind of tried to be capitalist about it, because like the problem is that you have unpriced externalities. So they tried to price the externalities. They already had industrial nodes, so they actually went for like one of the long-term outcomes here, which is just have industrial nodes. And as a consequence, like it's very hard for any third party to run a node and validate the blockchain, download all the data. We know that from experience at Coinmetrics. So EOS is one extreme. But yeah, there's like a whole bunch of blockchains that do this.
I wish I could rewind the clock and actually have this conversation again, but back in probably early 2018, there were some really well-respected global macro people that I was talking to that were just pitching me hard on EOS being the Bitcoin killer. So really funny conversations if you really think back on some of those just crazy points of view.
Nothing ever changes. I mean, there's new Bitcoin killers every year. It's just a different one each time.
So you wrote another piece for the American Mind this week called Après le Déluge Bitcoin, which I'm guessing you did not pick that title, but you basically, I thought it was a good kind of good hook for a bunch of folks that maybe not as familiar with Bitcoin and the blockchain industry. And your point was less about the monetary properties of Bitcoin on this one and more about how the infrastructure, the fact that it is not owned by anyone and not really subject to some of these political kind of points of non-neutrality, make blockchain architecture, specifically, I think you're talking about like stable coins, just a lot more compelling. So another another good piece. I think that it'll be interesting to see the reaction to that one. There's more of a mainstream audience reading that than CoinDesk.
I'm kind of scandalized that you think I am not sufficiently cultural to come up with a title like Après le déluge.
Did you come up with that?
I did not. That was the editor's. Yeah. So
what was your proposed title?
it was something very boring, like the world needs apolitical financial infrastructure. So maybe I'm just not the best title comer upper with.
I think I like to be very specific with my titles.
Yeah.
I think that.
Say what you're going to say it, and then say what you said, right?
Exactly. And I think the 5-paragraph essay, by the way, total tangent here, I wish more people could just talk that way. Every time someone's rambling, it's just like, give me the introduction, the 3 points, and the closing. Come on.
I don't know. I don't think we do a good job of that either.
Well, we're just rambling now, but I mean, in general, if it's a high stakes meeting, give me the 3 bullet points.
The art of the ramble. So yeah, this is, if you guys don't pay attention to The American Mind, which is a publication of the Claremont Institute, highly recommended. I really like those guys. The editor is this guy, James Poulos, very smart. Fun fact about Claremont, I actually considered going to Claremont McKenna. And then I was accepted, but I didn't go.
Oh man, what if?
I know, that's a real what if. Like, I could have spent 4 years in like beautiful Southern California. Instead, I spent 4 years in extremely rainy and cold Scotland.
What could have been? You could have been like a West Coast Ethereum person coming out of that experience.
Yeah, that would have been the outcome for sure. But yeah, this is for general interest. So I would recommend this if you have no coiner friends that, maybe they know what Bitcoin is, they don't really understand what crypto is, they don't know what it's for. This is a rebuttal to that. Basically, I'm talking about neutral or apolitical financial infrastructure. And I wouldn't say that crypto is perfectly neutral. Like, we actually see a lot of corruption in protocol design. Probably try and write about that at some point. But it still does a fairly good job, especially relative to our current highly politicized financial rails. It's no secret that the US weaponizes SWIFT and the correspondent banking system, right? So that's the point is, look, we're not going to be able to do this forever. People are eventually going to get sick of it. So what's the alternative? Is it a China-dominated system where it's just, meet the old boss, same as the new boss, or the other way around? Or is it a truly neutral system that nobody controls? And that's what crypto could be.
Yeah, I think it's a good point. Pretty clear that these stable coins are not going away. So we'll keep an eye on it. Some more analysis and some more articles that I thought were interesting this week. So Flipside had some coverage in Cointelegraph, which, by the way, I didn't realize Cointelegraph is so big. A lot of people read that site. It's not in my rotation, but Cointelegraph did a piece about some of the transaction fee dynamics at play on March 13th when they had that big downdraft in both Bitcoin and Ethereum. So that was interesting. Transaction fees, very interesting to me. I was talking to one of our friends in the mining community today, and his point of view was that as the capital markets around derivatives get more mature in the mining space, we're actually going to start to see swap contracts and other forms of derivatives formed around transaction fees. And so think about it, if you're Coinbase and you know that you're going to be paying X% in transaction fees based on your outbound transactions per day, would you want to kind of lock that in, over time, as opposed to having the volatility? Pretty interesting to me.
So you'd want to hedge your exposure to future fees that you expect to pay.
Yeah, exactly.
That's very clever. I actually hadn't thought of that.
Yeah, I think that was a really astute point. Maybe we'll do maybe we'll do a podcast episode just on derivatives and some of these things. Some of these things are pretty much not likely until we start to have more compression in the block space, I think.
Right.
Yeah.
The
like
fees
right
are
now,
still
that's not really
relatively small relative to the subsidy, both on Bitcoin and Ethereum. They're still in the single digits.
Right. So right now, I think it's pretty likely that we're just going to see like mining contract type of derivatives and hash rate futures and stuff like that. But maybe at some point we'll see more around transaction fees. And then another article that I thought was pretty interesting was just talking about some of the hiring that's happening in the crypto space. So we have record unemployment in this country right now, but some of these exchanges are really ramping up. So Kraken, I think, was on track to hire 250 people this year. They're going to increase that to 350. A lot of interest around the Bitcoin halving, a lot of people looking for alternative assets. So it's good to see some of these crypto infrastructure companies growing so quickly. Kraken
is really on the spree, and they're hiring a bunch of Bitcoin OGs. Seems to be almost part of a marketing strategy, I would say.
And what else do we have this week? So a couple good podcasts. So you were on Hidden Forces with Dimitri. I thought that was good. Not that that's really a crypto podcast, but you talked about Bitcoin a little bit. And then Jeremy Allaire was on What Bitcoin Did with Peter McCormack. I thought that was a good episode. I was surprised he hadn't been on the podcast before, but he was talking about stable coins and specifically USDC, obviously. That was a good podcast. I'd recommend people checking it out. All right, so I think that's it for the week. Day 5,237 of lockdown, but I think we're getting used to it, right?
Yeah, it's the new normal now. Maybe we'll never come out. We'll just become like mole people.
I know. I think we're like, who needs that office? Do you even remember what's in the office? Your dead plant is definitely there, but apart from that, what's it?
Feel bad for the plant.
You got some Bitcoin art that's probably still there.
Maybe it's been looted. I think that's a really high value item for looters these days.
Have you seen any good masks come to market that have like Bitcoin logos on them, or is that a thing yet?
I'm sure it is somewhere, right? I don't know where you would actually get masks, though. I feel like they're still kind of hard to get.
If anyone has a good line on some good masks with logos or memes on them, let us know. I'd definitely be interested in that.
Got to make the most of it.
So we have a couple good podcasts coming up next week. Had Marcos Varimas, who formerly led cryptoasset research, who's managing director at Cambridge Associates, has a really good perspective on the institutional LP landscape. He'll be coming on the podcast on Monday. He's now at Evanston Capital Management. So really excited about that one. And then we have a couple more up our sleeves as well. You've been expanding this dollarization series, so we'll have some good pods coming out in the weeks to come.
That's right. Well, stay safe and have a good weekend.